Welcome back to Investing Talk Podcast.
Today we're looking at SEALSQ Corp.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we look at this company, we're not just talking about another tech stock.
No, it feels bigger.
It is. We're fundamentally talking about the future-proofing of our entire global digital infrastructure.
That is a hefty mandate. So, okay, break that down for us. We're looking at a company that's a leader in, post-quantum and semiconductor security. What does that even mean in simple terms?
It means they're selling the next generation of security. Right now, everything, your banking, government data, military comms, it's all protected by encryption that, current computers can't solve.
Right.
But quantum computers, when they really arrive, they'll make those locks completely useless, like paper clips.
That's terrifying, actually.
It is. And this company is building the quantum-resilient hardware security you need for that new era. They're literally creating the backbone that keeps the lights on once that quantum threat is, a reality.
And it's not a theoretical problem anymore.
Yeah, it's imminent. Governments are already passing laws about it.
You hear terms like PKI, public key infrastructure, and your eyes glaze over. But that's just the system that proves you are who you say you are online, right?
That's it. Exactly. It's digital trust. And SEALSQ is taking that base layer and making it quantum-proof.
So they're future-proofing trust itself.
Precisely. And what makes their competitive edge so strong is the moat they've built. They have their proprietary quantum shield products, and this stuff isn't easy to replicate.
Because of the R&D.
The sheer volume of heavy, specialized R&D investment makes it incredibly difficult for anyone else to catch up. They've been patenting solutions for this for years.
Which you can see in their market position. They're becoming the go-to supplier for this, especially for high-stakes clients.
Yep. Partnerships with governments, large enterprises. They get that waiting is not an option.
It's a classic first-mover advantage, isn't it?
Amplified by technical complexity. They're connecting this necessary tech directly to stable, long-term revenue. This isn't optional for their customers. It's mandatory.
Okay, which brings us to the fundamentals. And for me, this is the real aha moment. Let's talk about their liquidity.
Their balance sheet, yeah.
Because the company ended Q3 2025 with cash reserves over, what was it, $430 million.
A staggering number.
Yeah.
And we have to pause on that because it changes everything. That kind of cash gives them enormous strategic flexibility.
So they're not just surviving.
No, they're funded to acquire competitors, to invest without pressure. They can lead on price. They can lead on technology.
That's a great point. It's a war chest to basically consolidate the market. But where did all that cash come from so recently?
A big chunk of it came from a major warrant exercise that finalized back in early October. That brought in $69 million in gross proceeds.
And for anyone who doesn't know, a warrant exercise is a huge vote of confidence. It's existing investors choosing to buy more shares, injecting capital directly into the company for, operations and investments.
Exactly. So the foundation is solid. Now, operationally, the growth is happening right now. They confirmed their 2025 revenue guidance is between $17.5 and $20 million.
And the growth so far?
Year-to-date growth as of Q3 was 41%. It was already pretty solid for such a high-tech niche.
41% is great, but the future projection is what really jumped out at me. Management is guiding for up to 100% year-over-year revenue growth in 2026.
Yeah.
That seems incredibly ambitious. Is that based on contracts they already have, or is that just a forecast?
That's the key question, and it speaks to their inflection point. While we don't have the explicit breakdown, that kind of acceleration is what you'd expect when a niche technology, one mandated by regulation, goes mainstream.
So it's driven by post-quantum product sales and just expanding globally.
They're betting the wave is about to break.
Yeah. So the risk, then, of missing that 100% mark is tied to how fast governments move.
Precisely. It defines the upside, but it does hinge on those external tailwinds.
Let's talk about the execution that backs this up. The IC Alps acquisition seemed pretty key.
Oh, pivotal. Its successful integration was a huge reason they reaffirmed that strong Q3 revenue of $5.1 million.
But what did it do for their tech, their capabilities?
It expanded their design expertise. It allowed them to shorten the time to develop these hyper-specialized semiconductor solutions. They didn't just buy revenue, they bought talent and IP.
And their product pipeline shows it. We know there are 2 post-quantum secure microcontrollers just about ready for market release.
Tangible products hitting the market soon. It shows they're staying ahead.
So if you look at the last few months, it's a steady drumbeat of good news.
A very coordinated stream. September was about reaffirming their tech commitment. October was about bolstering the balance sheet. November was about strong guidance.
Okay, that sets the stage perfectly. So let's look forward. What are the near-term catalysts, say, in the next 3 months?
The big one is the Q4 2025 earnings release. It's expected around December 10th or 11th.
And if that release confirms the growth and, more importantly, gives some confident color on that 2026 guidance.
That'll be a major upside trigger, no doubt.
And then you've got the broader market catalysts, things that happen regardless of company news.
Right. Institutional portfolio reviews in late December, and then the ETF rebalancing in mid-January.
Given their story, high-tech, huge cash reserves, they check a lot of boxes for institutional managers.
For sure. We expect institutional interest to stay really strong, and that could drive a lot of activity during those rebalancing windows.
All right, so we've covered the facts. Now let's get into the fun part. The whispers, the market chatter, the high upside rumors.
Indeed. One of the big ones is chatter about a massive U.S. government contract.
For what specifically?
Specifically for their quantum-resilient microcontrollers, for defense and other sensitive federal programs.
That would be transformative. A government contract at that level brings scale, credibility.
And revenue stability. It would instantly validate them.
What else is out there?
Geographically, there's talk of a strategic partnership with a leading Asian semiconductor manufacturer.
That would be all about market access, right? Getting their tech embedded into consumer electronics, stuff like that.
Exactly. It would expand their distribution channels massively.
We're also hearing some technology rumors tying into the latest buzzwords.
The blending of SEALSQ's quantum security with AI-driven IoT chipsets.
If they pull that off, they're sitting at the intersection of three enormous trends: quantum, AI, and the Internet of Things.
That's a combination investors would find very, very attractive.
And finally, the market structure whispers. Talk of an inclusion in a high-profile tech index in early 2026.
It's speculative, but index inclusion is a big deal. It triggers mandatory buying from passive funds. It's a supply and demand thing.
Okay, so with all this potential, where's the stock right now? What does the technical picture look like?
Well, the stock recently traded around $3.94. It looks like it's in a consolidation phase. There's key support confirmed around 360, which suggests a short-term floor might be in place.
And the analyst targets are, well, they're pretty aggressive. We're seeing a range from $6 up to $8.23.
Which represents a potential upside from current levels of, 52% to over 100%.
That signals some serious confidence. What about the momentum indicators?
So the RSI, the Relative Strength Index, is pretty neutral at 36. But the stochastic oscillators are actually registering as oversold.
What does that signal to the average investor?
It suggests that while the stock has been quiet, some traders are seeing this as a key entry point. They think it's primed for a bullish move as we get closer to Q4 earnings and those other catalysts.
An accumulation phase before the news cycle.
That's the idea.
Okay, for balance, let's talk risks. We've laid out a very strong bull case, but where could this all go wrong?
There are two primary risks. First, integration challenges. IC Alps was a great acquisition, but successfully merging a specialized team and their tech stack without losing talent or momentum. That's always tricky.
It's often overlooked. If that integration snags, it could delay those new microcontrollers and put that 100% growth target in jeopardy.
Absolutely.
Yeah.
The second major risk is just fierce competitive pressure. This is a dynamic field.
The big semiconductor giants aren't just sitting on their hands.
Exactly. They are aware of the quantum threat, and they're pouring billions into R&D to catch up. And there's also a structural risk that government standards could shift, maybe endorsing a competitor's algorithm over theirs.
That could undermine them almost overnight. So what about mitigation? How are they handling these risks?
Management seems proactive. The IC Alps integration appears to be on track, based on their guidance.
And crucially, that massive liquidity we talked about, that $430 million in cash acts as a powerful cushion.
It makes them incredibly resilient. They can weather price wars, they can pivot, they can acquire new tech if the landscape shifts. It's a stability that few peers in this space can match.
So if we wrap all this up, what we have is a really compelling story. You've got accelerating growth, industry-leading liquidity, and these powerful non-optional tailwinds from government mandates.
It puts SEALSQ Corp in a very interesting spot. It's appealing for short-term catalyst trading, around earnings, but also for long-term investors who want to capture the foundational security tech of the next decade.
It's not just an investment in a company, it's a bet on who gets to secure the post-quantum world. And that's a very high-stakes, future-defining sector to be in.